All right, and welcome back for another episode of Carnivore Trades. Today is Friday, September 23rd, 2022. If you're not done so already, give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Help navigating this crazy market here this year. Anyways, what a volatile day on Wall Street. So everybody knows we had the gap down and the waterfall selling finally came. We talked about this last Thursday, said we're kind of getting close to this type of scenario here. And we kind of had some decent little moves down since then, and then it's kind of muted a little bit. And then we got the big sell off in the FOMC. And yesterday we kind of had a lackluster, sellers kind of got tired. And we kind of flagged there. And yesterday I said, we might have like a pivot low in place here, potentially. And I finally took my first loser here out of the last 26 trades. So the streak ended at 25 today. So I'll own that one. I did take a small long position yesterday ahead of the close. And we stopped out of that early this morning. Still holding our core short position, but I was looking for kind of like a some type of bounce yesterday. I thought that, I told my members just an hour ago, I kind of thought that today's action would have been switched with yesterday more so. I thought we would have got the gap down yesterday based on the close. If we flip over to the spiders here, based on the close there, I mean, we had that big rally and then it got faded. So, usually when you get the fake move, usually the rally after that, if that gets faded, that's usually like, inducive, will induce fear. And we didn't see that yesterday, so I said, well, maybe we have a chance to put in a pivot low. Now, after with today's close, down just 1.63%, we might actually have put in that pivot now. 1, 2, 3 down, you filled the gap. You're basically into double bottom. This is a tough market. I know I've got my work cut out for me this weekend. We're going to be doing a lot of work here. Cycle analysis, pretty much everything. There's lots of stuff I got to go over. Tonight, I'll probably unplug a little bit, though, as I suggest everybody else do. It's been a long, volatile week here. But in any case, I thought we would get possibly a bounce yesterday and maybe up into like the 390 area. And that would be a shorting opportunity, maybe even up into this convergence of all the moving averages and these trend lines and so on. And then we would, get a fade after that. It looks today, though, obviously, that didn't happen here. What a move, though. We got the waterfall. And, we got some short covering here towards the end of the day. I'm just digesting this myself here. So it's right after the market close here, just closed about 5 minutes ago. The weekend video will be a lot more detailed. I'll have some more time to go over everything, but just going to kind of wrap things up here today. We are a little oversold. We did get oversold here on the daily, that we did get a bounce. It looks like shorts covered ahead of the weekend, not wanting to hold into the weekend. There's a lot of geopolitical stuff that can go on. Putin's doing Putin things. So there's lots of risk out there on both sides. And, you are into double bottom and we are oversold. So, I mean, there's definitely a case to be made on the long side. There are some interesting kind of like little highlights here. Like if you look at Microsoft, it actually went green at one point today, and it actually had a really nice move off the low. So there was weird kind of pockets of strength here. Even Google got a little bit off the lows there. And, this isn't a terrible look there. If you just took this for face value, this kind of intraday move, this doesn't look like a bloodbath, but, you look on the weekly and it's pretty ugly. So, Google is very weak, but there were some odd pockets of strength here. Microsoft, we talked about, came off the lows. Ugly, you're now losing that pivot on a weekly basis. So the market, again, we're looking for some type of a bounce here at some point. Again, the equinox, we talked about that yesterday. That happened overnight last night. Usually you can get pivots at or around the equinoxes and solstices. So we'll see. I still think the next bounce will be a shorting opportunity. But, for right now, we just got to marvel at the volatility here. Think about it. 3 days ago, we were at 390, and we got all the way down to 363 on the spiders here at some point today. So that is a remarkable move. The VIX finally broke out of that little range. We do have a rising wedge here, and it almost kind of, you can make a case almost kind of close back inside of that. In fact, if you want to just, depending on your artwork there, you could make a case that it's, more like this, but either way, you still have kind of a bit of a rising wedge there on the VIX, but it did finally push up and got above that pivot there from the FOMC day, and we got as high as 32 intraday. So lots of movement going on here, lots of volatility. Finally, getting a move. One thing I will notice though, or will note, I should say, is that spiders here, so 108 million shares, that's including the last 7 minutes after hours. So just over 100 million shares traded. It's really not as big as you'd think, right? So for us to gap down from, 374 and get all the way, basically a 100-point move, you'd think that the volume would be a lot higher. It really wasn't. So we didn't see like mass panic dumping. We got some dumping on the open, but it was really kind of a controlled sell-off most of the way. And that tells me that a lot of the move was through the futures. You can see the volume on the futures is much higher than the last couple of days. Really, the only day that it hasn't gotten higher than was that big Jackson Hole reversal there. But if you look at the spiders, it's basically just kind of average, volume with the last 3, 4, 5, big volumes, surges. And that tells me there's not a lot of huge funds dumping. There's no big block selling going off. It's just kind of a controlled move. So you can make a case that they fed this down there on purpose so that they could, basically just cover shorts or whatever. But I'm not seeing big panic dumping. Even though the VIX did break out a little bit, it did come back in by the end of the day. So just a little, I'm not trying to spin this bullish or anything, but just a little kind of, just things you got to pay attention to, when you're dissecting the markets here. But in any case, what a move here. Just in general here, the volatility has been insane here, which is great for trading, by the way. I love it. We're having a great year this year so far. I love the volatility, but you definitely got to be careful in this market. And, you can't over-position yourself. I'm going halves, quarters positions pretty much every time I enter something here, just because of the volatility. But you can see here on the triple Qs, closed exactly the same down as the spider. So very interesting, 1.63, 1.63 on both the SPY and the Q. The NASDAQ was strangely stronger in the morning, I will say that. And, this chart almost looks a little bit stronger here. You did fill the gap here, but, came off the lows just like everything else did. But this chart looks like it was a little bit less violent. You can see the range on the spiders. That's a pretty long, big long candle there. On the triple Qs, it's a little bit of the candle's a little bit smaller. So the range is a little bit weaker on the NASDAQ. And again, leads me to believe a lot of the move that was coming from the futures, it's, we're not seeing big block dumping, that type of action. So again, just little tidbits to point out there. We are oversold. We got a bounce. We'll see if we can get some follow through into Monday. We filled that gap there. So we'll see what we get here. I still think the market's going lower, but that doesn't mean we can't get a bounce in the meantime and, get kind of a relief here. The diamond, big loser on the last really week or so. So that make a 52-week low and a new closing 52-week low. The actual Dow Jones here, also a 52-week closing low. And let's see, 29.6. Yeah, so that closed below that pivot there on a weekly basis. So not a good look for the Dow, although the Dow is price cap weighted. So we take that with a little bit more of a grain of salt. But, what a sell-off there for the Dow. Also down 1.62% exactly there on the DJI, and then Russell 2000 here. The leader to the downside, down 2.38% here. This was leading for a very long time, really up until the last 3 days or so. This was actually outperforming that. It had the biggest squeeze out of anything, and it was actually retracing the least out of the 4 major indices. And now over the last 3 days, a big, huge sell-off here on the Russell. So money leaving small caps, which is a risk-off signal. And Russell leading to the downside, which does kind of confirm the move down. Not that it really needed confirmation, but in any case here. All right, let's move on to semis. So semis getting into double bottom. So SMH here, 189.94, low of the day. It looks like it pierced at 189.47. So we got a pierce of that double bottom level there on the SMH, and a little bit of a bid off that. Again, oversold, going into double bottom. Makes sense that it's going to, catch a bid off the lows. But semis down with everything else. IGV also weak. So that made a new. Now, if you look at this daily candle here, you'd say, well, it's oversold. You came off the lows. You had good volume. So maybe this can get a bid here. But then you take a look at the weekly, which is more dominant. That's a very ugly weekly candle with volume, especially the last 2 weeks. Again, engulfing reversal, just like the, pretty much every stock and sector in the market. Engulfing reversal last week, and then this week follow through to the downside. New 52-week lows on a closing basis. They should get down to about 240, 245 here, which is really not that far away to go. But again, cloud software getting hit, down 1.5% there. Biotech also losing this 100 moving average, confirming below that. Still holding up better than a lot of things, but we've been talking about this yesterday and last couple of days. It closed below that weekly green bar low, so biotech is now vulnerable down to 72 bucks, and if it loses that, it's down to that double, triple bottom there, um, basically at the lows. So biotech down with the rest of the market. If you want to see a sad chart here, let's look at the Dow transports. Man, just no relief. Gap down on the FedEx news. 1, 2, 3 consolidation. 1, 2, 3 down into that 12,000 area. I think this wants to go to 11,000. I'd be interested in maybe picking up along at that area. But for right now, Dow transports just getting bludgeoned here. You could make a case can get a bounce up to the 12.7, 12.8, maybe 13,000 area. Definitely wouldn't rule that out. But this is an ugly, ugly chart here. Your only saving grace is that you came off the lows a little bit here by the end of the day. But look at those big sell bars there on that weekly time frame. All right, interest rates here. So 10-year did manage to close basically flat, so we had a little bit of a gap and crap there. I wouldn't make too much out of it. 30-year did come back in a little bit, and the 2-year did come off the lows, although it's still finished negative here today. And again, we've been talking about this pretty much every day. The 2-year is telling us that the NASDAQ specifically, but stocks in general, need to go lower and they need to catch up to the downside. So that's really been the story there. So you guys who saw my tweet earlier about TLT, basically what I said was there's a lot of people out there, specifically bond fund managers and so-called experts. They're like the loudest ones in the room today, and really they've been the loudest ones in the room for a long time, and they're the ones that are losing the most money. People have been telling, say, oh, you got to go into TLT, and they've been saying that for the last 2 years. Well, TLT's down nearly 50% here in the last 2 years. 170, 180 to 104. That doesn't look like good returns to me. The only people who've gotten butchered worse than that is altcoin holders. And so my comment really wasn't anything to do with TLT itself, so much as there's a lot of loud know-it-alls right now, and they're going to get louder, but it's like you guys need to honestly shut the F up, because you guys have performed the worst and you're the loudest trying to lecture people on macro. And just one of my little pet peeves here. But bonds here, overall, long story short, inverted yield curve. 2-year yield got up to 4.2% by the close today. 2s and 10s are inverted by 50 bips. Let's see, 5s and 30s are inverted by 36, and the 10s and 30s are inverted by 7. The 3-month and 10-year did gain a little bit yesterday and today, so that did back off a little bit here. So maybe we are seeing a tiny little bit of a flight to safety in treasuries. It could be the start of that. The problem is I've been hearing that same argument for the last 6 months, and it hasn't happened. So I need to see follow through from bonds. I need to see actual trend changes. Otherwise, it's going to be more of the same here. But yeah, anyways, enough of that little sermon there. Let's get on to the home builders. XHB down, came off the lows nicely. Take a look at XHB here, down 10 cents on the day, or 9 cents there. They almost closed flat. So a nice move there, basically got close to that 54 handle. We talked about that yesterday. A nice little recovery for XHB, and ITB actually closing green, up 8 pennies in a down market. That's something significant. Could be, could be something, if we're seeing some money flow into, home builders. Let's take a look at, mortgage-backed securities. Yeah, they came off the lows a little bit here, and HYG made new 52-week lows, so not a good look there. But home builders coming off the lows a little bit. Could be short squeeze, could be a leading indicator. Remains to be seen, but definitely an impressive move there. And then VNQ, a puke fest here. This is wickedly oversold though on the daily time frame and really the weekly as well. And you're into a pretty good level here. You got a gap fill right down in this area, and then you got this area where you broke out of. So VNQ probably getting into some support here, but just a bar fest here the last week or so for real estate. XLF finally getting its comeuppance, and I can finally say the broker dealers, I told you guys it's gonna go back below that 420 area, and finally things just caught up, right? There's only so long it was going to hold up for, and that's really the case for all these strong sectors. We'll talk about energy in a minute, but XLE getting pounded. But yeah, XLF all the way back down the lows, filled the gap here, got a nice bounce. It's oversold, but it's getting its comeuppance here. I mean, the yield curves are 2s and 10s are inverted by 50 basis points. So that's not good for financials. So the outperformance has been a little bit of a question mark for me. The broker dealers, I understand a little bit more because they make money off of the volatility and selling premium, which we've had no shortage of that this year. But they finally got below that 420 area on a weekly close. You went right into this little breakout area and got a bounce. Let's take a look at the weekly. Yeah, so right on that 20 week moving average. If we break this area, you're right back down to 400 though. So let's just draw that in right now. So 400 as the next real level on the broker dealers if it bounces and can't make a higher high. So, you know, again, everything getting hit across the board and financials finally coming in here. All right, crude taking another little dump today, down 5%. I like crude in this area. You guys know that. I did pick up a little bit of UCO today, so I am long oil right now. Wouldn't rule out a little bit more of a dump, but you know, it's just kind of averaging in here. Again, this is not the market you want to go all in on one position or, you know, a full position size, at least, you know, not right off the bat, unless it's something like a Procter Gamble or Kimberly-Clark or something like that. And oil is very volatile right now, so got to average in, inch in, but I still think we are into a buy zone from a technical standpoint on crude. As far as XLE is concerned, almost 7% down. You know, that's huge for, you know, like look at Exxon. Exxon's a safety play, down 5.5% here. Chevron, let's take a look at that. Chevron down 6.5%, gapping below that 200 moving average. XOP, again, same thing, gapping below that. There is a little gap fill down there, but this is a pretty good beat down there with volume. And the OIH as well, back down almost to the July lows there. So a pretty good, you know, and that's a good support level there. You're oversold going into that, so we should get some type of reaction. But pretty heavy volume there as well. And again, this is why I haven't really chased any of the energy stocks. You know, I've been kind of saying like we gotta wait for it to digest and play out. And sometimes these corrections go on longer than people think. But overall, you know, nothing is today. Nothing was really safe except somehow homebuilders scratched out a gain. But nothing was really safe here today for the most part. You know, financials, people have been hiding in financials and they've been hiding in, you know, energy to a degree, and that has kind of come to an end here. But pretty big beat down here across the board. Nat gas down 3%, not quite into this area yet. I'll consider it next week, possibly for a long, but we got to get in there in the right way. But nice little sell off there. Nat gas down 3%. I do think it gets down to this level regardless, but it's just a matter of how it gets in there for me to actually want to buy it. But anyways, dollar index, so Japan intervening a little bit, didn't really help out today as the dollar just surged higher. Let's look at the yen again. So interestingly enough, that trend line is still kind of worked out there, as you got that big kind of, it's not even really a spinning top, it's just kind of a reversal candle, and the yen was back up again today anyway. But the dollar index, again, it's been the one flight to safety. The thing is, with the dollar, eventually the trade is going to become, I mean, it's crowded now. It's going to get more crowded, and that can only go on for so long. But for right now, it's holding up. Let's keep an eye on this trend line here. So I'm just catching this with my eye. So, you know, possibly something like that. And that takes you up to that 114, 115 area. Obviously, everybody's looking at 118, 120. Definitely can't rule that out. Again, we talked about the measured move with the dollar last week, so that is certainly a possibility. But, you know, again, dollar is a safe haven right now, and you got to respect it because it's just moving higher. Gold here took a hit. Again, I love the negative sentiment in gold right now. I want it to continue. My Twitter feed is full of people bashing gold all day long. I'm not long yet, but I'm looking to get long, and I've got the buy levels already worked out. We're just waiting patiently for the dump, and I think it's coming. But gold, a little bit of an inside bar there. We talked about that yesterday, bearish inside bar. And then you had a move lower today. So I think maybe this, you know, if we get panic, which I think we will shortly, and I mean real panic, not this like, you know, controlled sell-off. I mean like real waterfall selling where the VIX is spiking. We'll get that sell-off in gold, and it'll end up being an insane buying opportunity here. As far as the miners, they did take a big hit today. There's no way around that. I will say, though, you know, you still held this kind of falling wedge low, and you still have that RSI divergence here. So, again, if this market bids up, this can make its move here. So we can see the higher lows on the RSI and the lower lows with the falling wedge there. That does catch my eye here. Obviously, no way around it, though. Still a pretty big down day, but the miners I think, are still seeing money flow here. And, you know, you had the big sell-off today, but it really wasn't as much of a horror show as you think. And do you want to be the seller down here, or did you want to sell up here? So that's one way of looking at it there, but I still think that, you know, we're getting close to a pretty awesome buy level here in gold. But, you know, it is what it is. Like I've said, if we have a big sell-off, you know, everything will get hit. Yes, miners will get hit, gold miners will get hit, energy will get hit, financials will get hit. That doesn't mean that there won't be a good buying opportunity around the corner for them. Silver, on the other hand, taking a little bit of a hit today as well, doing a little bit of damage to the inside bar pattern, but they did save it off the lows here by the close. So technically you still have an inside bar. We'll be watching this next week. So the pattern's a little bit more sloppy now, but they did save that inside bar by the close. So we'll see what we get next week with that. And then platinum taking a huge hit. So we backed out of the second half of our position of platinum today. Basically just a small gain on the second half, but yeah, we had a nice gain on the first half, so it ended up being okay. But again, platinum still has a good shot of putting in a W and then possibly a V pattern here. Just needs to make a higher low. I would be interested in getting back into this again. Just need to see the right pattern here. But platinum, you know, getting hit just like pretty much everything did today. And then palladium as well, down 5%. Nothing really to do with the pattern there right now, but did get hit today. And then copper as well officially made that lower low and on a weekly basis. So this pattern is definitely weaker now. You got to see it hold this green bar low at 3.31 on a weekly basis. Otherwise, copper can be headed lower as well. All right, so over to the coins here. So Bitcoin, you know, down with everything else, but honestly, you know, not a horror show. Even Doge managed to be up 6% today. I don't know what happened. Sometimes these coins just trade on their own time. And today is definitely one of those times. I'd say you've pretty much a mixed bag here today. And it's not like they had that big tail candle like the spiders and the Qs did. But, you know, what can you say? Bitcoin holding on for right now. Again, there's nothing's really changed. The pattern's the same. You still have weekly bear consolidation and monthly bear consolidation, and you're still below this big trend line here. All right. Anyways, let's wrap up here. So back over to the spiders. You know, we finished off the lows here. We're bouncing a little bit after hours right now. Let's not make too much out of it. If we put in a pivot low today, bottom line, it's a short-term pivot low. We'll have a rally here. I'll work on some upside targets over the weekend. I've got my work cut out for me. But this market still has lower to go in the long run. Anyways, guys, going to end it here. You guys take care. Have a great rest of your weekend. Get some rest, and I'll talk to you all next.